Jeffrey, many thanks for making time to speak to us. Busy day, I can imagine, as it is. I just want to bring your attention to the fact that we are seeing a particular mix between, yes, a lot of attention being given to the properties in Johannesburg, but you seem to be de-investing when it comes to the CBD. Is it safe in assuming that the likes of Sandton are actually edging out the CBD today?
Well, I just want to comment as follows. We're not selling in the CBD. You're referring to an announcement where we indicated we'd be selling some of our non-core assets. Those non-core assets are not in the CBD. They're in the far outlying areas where we don't envisage much growth. We're still very much in favour of investment in the CBD.
And just on that sale of non-core assets, I think your statement talks about 10 non-core assets being sold off. I just want to get a sense of where that capital is going to be invested into going forward. So
in the short term, that will obviously be applied to reducing our debt, but we also want to generate a little war chest, so when we do get the right yields, we're able to recycle that cash into something more sustainable.
Right, let's talk about the exposure to interest rate risk. It is something that actually struck me. We're looking at you hedging close to 97.5% when it comes to interest rate risk here. What does that entail?
Well, you need to have a look at the whole profile. A lot of it, I think it's in August of this year, will unwind. And so our target hedging is between, I think it's between 70 to 80%. And with the unwinding of certain of those deals, we'll be far closer to that. 90% for us is a bit on the high side. But it's a temporary situation, given the opportunities that were available to us.
You also speak about the asset recycling, which I thought was really interesting when I was looking through the report, and just really what this entails and how big of a part of your strategy, your core strategy, is this in terms of maintaining optimal service to clients as well as growth in the company?
Yeah, we want to sell those non-core assets, and we want to put them back into the areas that we think that there's growth. The CBD happens to be one of them. We think that there's still a lot in the CBD. If one had to visit the CBD today, you'd be pleasantly surprised as the changes that are slowly but surely happening there.
Let's talk about the debt. Total borrowing up close to 9% if we are to actually put that on year on year. Yes. When should we start worrying about, as an investor, if I have actually pumped in some money and bought the stock here?
I think one needs to look at one's LTV, or loan to value ratio.
Which is looking good, yes.
Which is looking good. I think it's come down slightly. And I think that's the key metric to watch. We need to make sure that we don't exceed a magical number of 40%, as seems to be set by the listed sector, property listed sector.
Apart from using the capital that you'll be gaining from selling these non-core assets, what other growth opportunities is Octodec looking at in the coming period?
We have a number of projects on the board. That's one of the exciting parts about Octodec. Right now, however, the yields that we're able to achieve aren't quite where they are. We have a number of investments, a number of developments rather, that have been completed recently. The yields are there on those new developments are not accretive, they're slightly dilutionary. And so when those move from a position of being dilutionary with a bit of rental growth, I think we need to then start to relook at investing into those assets.
Brilliant.
Right. I want to bring your attention to the cost to income. Again, this is yet a very interesting one. Gross basis and net income costs all coming down. How are you managing to actually achieve this year on year at a time when, well, almost everyone in the rate space is struggling, but your costs are actually coming down?
Yeah, a lot of effort.
How do you achieve that?
A lot of effort. We spoke about developments. Developments are being considered all the time, but we haven't been doing much of them, and so a lot of the time is devoted to cost maintenance. The control over the assessment rate, very topical at the moment, is one of those costs, unfortunately, that we can't manage. We just hope for the best.
Right, Jeffrey, many thanks for making time to speak to us.
Thank
Jeffrey
you, guys.
Wapnick, who is the managing director at Octodec.